Welcome back to RealPage Economy Express. In the past 2 weeks, many much anticipated reports have come out, and we are happy to give a quick update on them. Starting with construction spending, July saw a slight decrease of just 0.3% compared to June. However, year over year, spending is up 6.7%. Private construction dipped by a little less than 0.5%, while public construction remained flat with only a marginal 0.1% increase. Next, job openings in July remain unchanged at 7.7 million, though that's down by 1.1 million from last year. Professional business services added close to 180,000 jobs, while the total number of hires stayed steady at 5.5 million. Separations, including quits and layoffs, rose slightly to 5.4 million. Turning to the August employment report, non-farm payroll employment increased by 142,000, while the unemployment rate remained steady at 4.2%, which is slightly higher than the 3.8% seen just a year ago. Wage growth also remained solid, with average hourly earnings increasing by 0.4% in August, bringing the annual growth rate to 3.8%. Perhaps the second most important piece of information from the latest jobs report were the revisions for the previous 2 months that showed a downward adjustment in job gains. June's payroll growth was revised down by 61,000 jobs to 118,000. Similarly, July's figure was revised down by 25,000 to 89,000 jobs. Combined, these revisions mean that the total job growth in June and July was 86,000 lower than previously reported, signaling that the labor market may have been weaker than initially thought. In the Unemployment Insurance Weekly Claims Report for early September, initial claims rose slightly to 230,000, an increase of 2,000 from the prior week. The 4-week moving average also ticked up to 230,750, showing a relatively stable labor market. On the inflation front, the Consumer Price Index for August increased by 0.2%, matching July's growth. Year over year, inflation is up 2.5%, driven by a 0.5% rise in shelter costs. Meanwhile, the Producer Price Index also increased by 0.2% in August, marking a 1.7% increase over the past year. This rise was primarily driven by a 0.4% increase in service prices. Given the recent softening in employment growth while inflation remained aligned with market expectations, particularly the August inflation reading, we anticipate that the Fed will likely take a more measured approach and avoid a large rate cut at their upcoming September meeting. That said, the final decision still hinges on how Jay Powell and his colleagues interpret the latest economic data. Thanks for tuning in, and see you next time.